So I'm going to introduce you to a dear friend of mine that I had the privilege of meeting back in 2009. But let me take you back to 2006. So this is a dear friend of mine, Dave Stech. And I met Dave at a conference, like I said, in 2009. But in 2006, so Dave is a financial analyst. He's a finance professional, a finance expert. He's in the real estate space, but and now he's in high tech as well, in the startup space also, etc. But he's got his fingers in a lot of stuff today. But in the early days, he was focused on real estate, and he always had a team. He's an economist, and he would speak every year at Harvard. And in 2006, he called the bubble. He was a little bit early. And every year he would speak at Harvard, and in 2006 they told him, don't come back. Don't come back. Because at the time, cats were getting mortgages, right? Yeah. So he called the bubble a little early, but anyways, he went to cash probably at 2007, 2008, and then I met him in 2009, and he and his team was buying up Vegas. They were buying up Vegas for 10 cents to 30 cents on the dollar. I think they bought about 1,200 properties. It was insane. And Dave and I became great friends. We've been friends ever since. And I asked him if he could come out and spend some time with you guys. Dave, please come up here. Please welcome Dave Stech. Dave, I know what you have done, what you've created has been incredible. And what's the value of your family office now? Like, can we talk about what your assets under holding are?
Is this being recorded?
Actually, it is being recorded, yes.
It's 6 figures.
Okay, 6 figures. Okay. Ladies and gentlemen, please welcome Dave Stech. Here you go, Dave.
All righty. Well, thank you, Daven, and I'm grateful to be here and grateful to be in front of you, although I can't see any of you, so hopefully this is going to work out well. I have now been in Puerto Rico I'm in my 11th year, and Heather O'Brien, I don't know if you're out there, but if it weren't for Heather having hosted me and picked me up at the airport on October 31st, of 2014 in a bumblebee costume because it was Halloween, I wouldn't literally be here. And fast forward to 2 years ago, I spoke at a family office event, but it was for centimillionaires only. You had to have a net worth of 100 million or more to get in the room, either as a speaker or as someone in the audience. And I thought, what are you going to tell centimillionaires that they haven't already heard? You're certainly not going to try to teach them how to make money because they've got that code cracked. But there was something else that I thought would be valuable, and I put this presentation together called The 10 Things I Want My Grandkids and Kids to Know Before I Go, that they would be able to leverage as well. And I hope you're going to find some value in it as well. So this is going to be different from other presentations that you're likely to see, and here's why. That's my youngest son, Josh, and his family. And this is a shortened version in a series of conversations that I'm having with my grandkids while they're old enough to understand. It's really part of our Stech Family Office Legacy Library that we've now been building for 6 years. And for the next 19 minutes, I'm going to ask you to do me a favor, and I want you to change your name. You are no longer whatever given name you were given. You are now Carter. You are now Carter, my oldest grandson, who's 8 years old. So what is your name?
Carter.
I didn't hear you.
Carter.
Is your name Carter?
Yes.
Fair enough. Carter. And I want you to put yourself in Carter's position. I want you to start with the only 3 things that you should do every day, Carter. There's really only 3 things. And if you're not doing these, you're not going to live a full life. I want you to make money, do good, have fun. That's it. Nothing else matters if you don't do those 3 things. So here's the thing. Carter G-Pop, that would be me, is the luckiest guy on the planet. Why? because I get to do this all with your papa, Josh. And I get to do it with your Uncle Blake, who happens to be here today. And it turns out that we make money, do good, have fun every day, no matter what. And we do it together. That's why I'm the luckiest guy on the planet. But the question you ought to be asking yourself is, which is the most important, Carter? Is it making money, doing good, or having fun? Now, if I were to ask an audience, and I've asked tens of thousands of people, so I know the stats, 60% of people will tell you it's to do good. 30% roughly will tell you it's to have fun. And less than 10% of people say that it's to make money, which is exactly the wrong answer. It's all about making a shitload of money because, oh, by the way, that's how you do more good and have more fun. If Daven hadn't been successful, right? So what are the 3 strategies to make more money? Carter, are you following with me?
Yes.
Well, it's really simple. You got to generate cash, accumulate wealth, and keep both. If you can do those 3 things, Carter, you're going to get filthy stinking rich. I mean, that's just how the world works. And this is the money game triangle that I drew for your papa and for Uncle Blake when they were 5 and 7 years old. I drew this triangle called the money game, and I said, sons, what's it take to win? And of course, at that age, like you, Carter, at 8 years old, they didn't really understand what became our family office 10-point blueprint for making a boatload of money in a short, relatively period of time. So it was all about generating cash, which is otherwise known as income. Income comes in four parts: active, passive, and recurring. It's accumulating wealth because those are assets that both throw off income and go up in value, and it's about keeping it. A, not losing it in the first place, and B, not giving it to your uncle, Sam, who's not really your uncle. He just calls himself that. So that's why, Carter, me and my friends moved to freaking Puerto Rico. So how does our family optimize all 3? Well, we treat our family like a business. And Carter, it's kind of called a family office. But our whole goal is to treat our family as though we were a business, to have a mission, vision, values, strategies, objectives, key results, and priority initiatives. And those 7 things drive our family like they drive a business. We're no less loving, we're actually more intentional. That's why we do what we do, to win the money game and to do a lot more. Well, our family, including you now, Carter, does 3 things. If we can do 3 things to grow and preserve our income and our wealth, it's always going to start with research. Why? Because we're trying to solve for what's coming next. If we can all, Carter, figure out what's coming next, it's easy. So when G-Pop spoke in 2005 at Harvard and said that the market was going to collapse and no one believed me and got thrown out of the room, what I realized is that by being a contrarian, you got to have a lot of courage, especially at that level. And if you're a contrarian and you're wrong, you're an idiot. If you're a contrarian and turned out to be right, you're a genius. And that's why being a contrarian is so important, because then we allow ourselves to invest based on that research, which is basically using blueprints and strategies and opportunities to optimize our whys, which is starting with ourselves, then our family, then our causes, then our legacy. Carter, this is all about creating a legacy for you and planting seeds in a garden that Grandpa will never see. Well, we're going to talk about research, we're going to talk about what's coming next, and we'll talk about what I call the State of the Union for real estate investors, which has now been expanded to technology investors and private lenders. And these were all these forecasts that kept getting made over the course of the year, which turned out to be right. And what I realized, Carter, is that G-Pop is always going to be wrong. The only question is by how much and in which direction. That's what forecasts are all about. You're not trying to be perfect, you're trying to be right most of the time. So we invest, we place better bets. If we can figure out what's coming next, isn't it logical that we could place more intelligent bets in our businesses, in our investments? Well, that's what we tried to solve for. So do we invest in oil and gas or precious metals or the stock market? Absolutely not. We don't do it, and the answer is we can't control the outcome. Did anyone here forecast that the market in the last few weeks, the S&P, would drop 10%? No. If you did, then did you get out? At the end of the day, when you can't control the outcome, why are you calling yourself an investor? You're not. You're a speculator. So, Carter, you can't do it either. And I learned this lesson from Merrill Lynch, because when I moved from corporate America to entrepreneurial America, I transferred my 401k at the recommendation of a well-meaning friend, and Merrill Lynch turned my 401k into a 201k, and were I still there, I'd be eating Special K. This is so important for you to realize, Carter, because when your papa and your uncle were now 11 and 13, I did some research, and I looked at the Forbes 400, and I said, what are the top 3 asset classes that billionaires made their fortunes in? And it turns out they're the same exact 3. So if you're trying to be and get outsized returns, you're going to focus in finance, technology, and real estate. Now, I've always heard that 80% of millionaires get made in real estate. I've never found any empirical data to be able to support that. But who wants to be a millionaire? I mean, seriously, this is all about adding zeros. And when you get them in that order, starting with finance, then with technology, ultimately you can invest in real estate. So guess what? That's what we do. We invest in real estate, private lending, early stage companies, and our whole goal is to move our money between those 3 verticals in a way for us to optimize. People always talk about real estate. Just buy real estate and hold it for 30 years. That is ludicrous. You need to move your money in intelligent ways. So what you should be asking, Carter, is why is our family qualified to even talk about these things? And by the way, I'm not raising money, Carter. I'm simply here to share and hope that you get an outsized return, because at the end of the day, you want knowledge arbitrage. It's the most powerful part of learning. So we've done hundreds and hundreds of real estate deals. Daven talked about it. We've done 11 investment funds. For the last now 12 years, we've been investing in early stage technology companies. Just in the last 4, we've invested in 81 early stage companies, 7 of which have become unicorns in 4 years, which is a good deal. And at the end of the day, we got a couple of venture funds. Private lending, we've done over 10,000 deals. And your papa, Carter, was one of 4 founding partners in a little company that was called Lending Home that became a $3 billion company. We don't try to be anything that we aren't. I don't know anything about anything else, but I got this pretty well dialed in. And if you don't know this guy, he's a pretty smart dude. And it turns out that he said, if you don't find a way to make money while you sleep, you will work until you die. Well, it turns out, Carter, that many of you can honestly say that you'll never, ever, ever have to work again. Or can you? The truth is, that is what you should be solving for. How can I get to the point where I never, ever have to work again because I've got enough passive income that's being thrown off from assets that are also going up in value, so the number that I'm dealing with is always adding a 0. That's important because our family is 95% passive recurring income. So the only active income we have is when I choose to be active, when we choose to educate others, when I choose to speak. That's the only active income we have. But for us, education is strategic. It's not a profit center. And here's why this is so important, Carter, and I never want you to forget it. Any of you Carters. What you don't learn, your kids will inherit. That is why you're here. That is why you're around a community like this. Because it's not okay to be okay, and if you're not on a mission for more, shame on you. Because your family's counting on you, and by the way, 7 generations from now, they're going to be a function of what you were able to do. And I know this because I grew up in a trailer park for the first 20% of my life, Carter. That's why this is important. So let's talk about real estate. Well, it turns out that real estate, like other markets, cycle. And that's what I've tried to make a practice of, is studying market cycles in real estate. So for the last 40 or 50 years, we've been able to do so successfully, and we've looked at the decline and the bottom and the climb and the peak and the tripping point. So where do you think we are right now? Well, it's all about the when in real estate. So you take Las Vegas, for example. As Daven talked about, we did an awful lot of buying in Vegas. We originally invested in 2002. 5 years later, the market collapsed. Then the median price dropped 65%. Then it went up 350% in the next decade. And now it's only going up by about 5% per year. So it's at or near the peak, which is generally where all real estate is right now. So Carter, you tell me, you're 8 years old. Does it make more sense to invest in 100,000 or 485,000? Well, your papa and your uncle and I were buying all in at $76,000. And oh, by the way, now it's at 485,000. Why is that important? Because at the end of the day, there are lots of ways to make money, and you've got to be intentional about where and what you put your money in. So in our case, we decided to buy this little place that was a $2.8 million home in 2009 for a whopping $618,600 fully furnished, turned it into an Airbnb called the Vegas Skybox, made $157,000 in our first year. And why is that important? In 2009, when we did this, it was the first year of Airbnb, and we had no idea they existed. What if we had invested in Airbnb instead of investing in a $2.8 million home that, yes, is now worth $5 or $6 million, so it's done just fine. But this was another fun one. We ended up putting this under contract for $109,000. We flipped it on an assignment for $259,000, so we made $150K. And then we bought it back at the auction when the market collapsed at $61,000. We rented it for 5 years and made $47,000. We sold it for $175,000. We took a 1,200 square foot home that we never really owned in a big way, never really lived in it or anything, and basically bought 3 homes free and clear from one. How crazy is that? Well, this was done with no debt leverage, which, Carter, we're going to talk about more. So what's the single most important word in investing? It's timing. So if people tell you cash flow or appreciation or cap rate compression, it's not. It's timing. And what's our research telling us today? What do we invest in now? What do we not invest in? I just did the State of the Union for real estate investors last week to our insiders. So if you'd like this, I'm going to show you a QR code. But at the end of the day, that's our insider community. And we're all focused on the same thing. We're already successful people, but we're all looking to add a zero. So if you want this, you can go to justbank.com. Just grab this QR code. I'll also show it at the end if you don't get it quick, but I need to move on. So I want you to understand how important this is, Carter. So G-Pop loves real estate. I just don't love it today. Because when I look at the facts, I realize that prices are at an all-time high, interest rates other than the 80s is an all-time high, affordability is an all-time low, inventory is growing, days on market is growing. So the question I always ask myself is, does that sound, Carter, to you like it's the best, the absolute best time? Remember, the peak of real estate was, or the bottom of real estate was in January of 2012, and we're now 13 years later. Markets don't last forever. The answer is no. It's not the best time to invest in real estate. It's the best time to invest on real estate. So are there still deals? Yeah. But ultimately, I'm not looking for needles in the haystack. I'm looking to own the haystack. So if I can create a haystack right now, what would it be? And it would be all around private lending, and that's what we're doing now. So we all know that there are 6 F's to real estate. We all know that each of those requires a different skill set. Whereas when you're a private lender, all you're doing is writing a check and getting a bigger one back, where the effort to return ratio in real estate is much better. So ultimately, what I want you to know, and this is my message to you, Carter, is that when you're at or near the bottom of a market, it's all about owning. And when you're at or near the top of a market, it's all about controlling real estate and avoiding the risk of owning. That, Carter, happens to be our private lending scoreboard. So we're not perfect. We've had a lot of wins and a lot of lessons. We don't have losses in our family, Carter. That's important for you to understand. There's your papa, having been featured in Forbes after having done this. I tell you this, Carter, because he won't brag on himself because I've taught him to be humble, but I want to do all the bragging on you and him. So that's the book, Carter, that you're going to read while you're on the ship. It's written by our family office, and Carter, I want your name to be at the top of one of those buildings. And the price is right. You can read all of this in the directory. But these are the things that you're always going to be doing at or near the top of a market, which is where we are, not at or near the bottom of a market. So 2 reasons that we wrote a book on private lending, not on real estate. And that's one, because the timing in real estate is not right. And second, we've done an awful lot of deals in private lending and have happened to build a $3 billion company. So Daven had said that it's going to be 70-30 in favor of having fun, 70% and making money, so don't tell them. But I'm here to find others who want to make 3 types of money: obscene, ungodly, and embarrassing.
I love it. I love it. My man.
Because, Daven, I'm contrarian.
100%.
So, anyway, that's it. So, as Jerry Maguire said, who's coming with me?
Yeah.
Who's coming with me? So, thank you. All right. Those are our group. We're on the ship. And here's how we'd like to, here's the help we'd like, and then I'm done. Affiliate partners for our Just Be the Bank workshop, referrals to 2 people we're trying to hire as sales directors, those of you who have done for you sales programs, and those of you who've created a referral kit. I would love to connect with you, as would our team. And for those of you that I can help, if you're interested in being a new or better private lender, I know a little something about that. If you're an already successful business owner who generates 6 or 7 figures, I've added some zeros beyond that. And those with stages, either virtual or otherwise, that would like to help teach your community around legacy and building a family that you can make money, do good, and have fun with, I'm the guy. So there's that QR code. I appreciate you all. Thank you. And Carter, I love you.
Wonderful. Dave Stech, ladies and gentlemen.